watching Ask BQ on Bloomberg Quint. I am Agam Akil, and with me is Alex Matthew. Hi, Alex.
Hey, Agam. Well, if you've got questions on equity, then this is the perfect show for you. You can send those queries to us on Twitter, Facebook, YouTube, and WhatsApp. You can also call us on 022-4540-4141, or you can mail us on askbq@bloombergquint.com. Just make sure to add the AskBQ hashtag.
Well, major Indian equity indices trading absolutely flat right now. The Nifty and the Sensex making, well, in fact, closing exactly where they were yesterday. Or rather, trading where they were yesterday. And we'll say for Sensex, perhaps a little bit of outperformance coming in. But your Nifty banking index really under pressure. And if you actually go and consider the way things have panned out, not very well. The broader markets are clearly underperforming the benchmarks right now. What I really want to point out is there are perhaps one or two names, or three at the most, which are actually keeping the indices flat. Had it not been for something like a Reliance Industries or ITC or TCS, as you can see on your screen here, these are the only three heavyweights which are advancing, and keeping the indices afloat. Had it not been for these, we would have actually seen the indices take a reasonable cut of, about anywhere between 0.5 to 1%. Speaking of the losers, let's pull up that list of stocks which are bearing down on the indices, and you have Tata Motors down 3%. Of course, CLSA maintains its price target of 150. It's currently trading at 175. Bharti Infratel, reacting to earnings, UPL down 2%. Among other losers too, we have, Sun Pharma declining after 2 straight days of gains. Adani Ports, again, wilting under pressure. The same for ONGC, another heavyweight. So there certainly is a lot of weakness in the broader markets. And as I would suggest, again, save for 2 or 3 names, there's nothing that's keeping these markets up at this point in time, Alex.
All right. That's the picture of the markets as they stand right now. Let's get our experts in for the day. We've got Ashish Kelkar, who's joined us. He's of Kiran, Jadhav and Associates. We will soon be joined by Sandeep, Jain of Tradeswift Broking, and they're both going to answer all of your questions this afternoon. I do want to start with a short-term query. Yes Bank is going to be in focus, of course, today. Ashish, any pointers for somebody who's looking for technical levels with regard to Yes Bank intraday and maybe for the short term?
Good afternoon, everyone. Yes Bank chart, basically it is trying to make lower tops and lower bottoms, but the earlier bottom is intact. Hence, there is an indecisive mode on this particular counter. Level specific 192 is very important level for this counter. If 192 is taken off, then the first target would be around 188. This is for intraday purpose only. So if 192 is taken off, then one can go short, and the first target would be 188. And in that case, the stop loss would be around 193.5.
Okay, guys, right at the top, I do also want to address what's happening with KPIT Technologies. We have a whole host of viewers wanting to know why there's a drop of 40% in KPIT Technologies. So, guys, this isn't anything alarming. Earlier this month, the company had suggested that they're going to undertake a certain demerger, which has been in the process and in the works for an entire year. The price at which you are seeing KPIT Technologies currently trade at 102 to 132 is excluding its engineering business. Tomorrow is a record date for the engineering business. So if you do hold shares and you do have those shares in your demat tomorrow of KPIT Technologies, you will also receive 1 extra share of the engineering business, which the management plans to list in March. So there's nothing alarming about this particular stock price. You must remember that KPIT Technologies is currently trading excluding its engineering business, and that will be traded later on and listed later on the exchanges. This is, of course, the pure IT business now, and this particular entity's name will also change later on to Birla Software. So this is in response to a question on KPIT Tech, and of course Riddhish Shah is, I think, one of them who also wants clarity on KPIT Technology. So watch out for that. But with that, we move on and talk about HDFC Life, because we have Ujjwal Kumar, who wants a 6 to 8 month view on HDFC Standard Life. So I'm going to hand it over to Ashish again. Ashish, currently at 363, that weakness has certainly seeped through in HDFC Standard Life. Are you expecting more weakness to come through?
See, in the somewhere in the month of October 2018, it has made a bottom of around 360, 350 odd levels, and we are very near to the bottom. So yes, from these levels, a bounce back is expected if this level is respected, and the most important level for this particular counter is 350. So if the price remains above 350, one should not get panicked. One should hold on to the stock, because on the long term, definitely the stock looks very good. So I would recommend to hold with a strict stop loss of 345 on a daily closing basis.
All right, let's talk about a company that has been in focus of late. In fact, I've pulled it up on my screen over here. Let's pull up ICICI Bank and look at the kind of declines that it has seen in the recent past. Let's pull up a couple of weeks at least, because it's now at levels of 363. From what I can see, it is corrected from levels of all the way from 383 or thereabouts. What is the short-term view here, Ashish, if you're talking about the charts? Because a lot of people have pointed out that there is on the chart some kind of weakness that is building into the stock.
Yes. The weakness is not a start of a downtrend. It is just a correction, is what the charts are suggesting. Because if we join all the bottoms made in the recent past, the trend line value comes to around 360 levels. And the stock price has started correcting from a level of around 383. I am expecting the price to test around 360, and from there another bounce back is expected. So I would not recommend to sell the stocks if you are holding. So it would be another opportunity to go long, but with a strict stop loss of 358 on the closing basis. If we get a bounce back from these current levels, then definitely once again it would test 380 levels.
Okay, this of course is in response to Akshay Mittal's query, who's written on this particular one. But I think we have Sandeep with us. Sandeep, good afternoon. Thanks for joining us. I'm going to take up KPIT Technologies with you, Sandeep. Today it goes and it's listed, excluding its engineering business today, and its engineering business will later on list in March. My question really is, and I think a lot of them, the other viewers are also asking about whether or not you would buy KPIT Technologies at this point in time, now that it's become a pure play with respect to business information technology services. And of course, those who will have these shares in their demat account tomorrow, they will also be eligible for that one share for their automotive engineering services. How are you seeing this demerger pan out, and what would you suggest with respect to both these businesses?
Yeah, see, all these things were discounted in this particular stock, and somehow this company has been, in the limelight because of lots of corporate actions in the past also, and lots of, some inorganic activities also. But then somehow I feel that all these news were already discounted, and somehow I don't see a great, level of value unlocking opportunities for those who were holding it. So I think they can continue holding it, and then whatever the shares they are getting and whatever the new listing will happen, so they can certainly encash. But for a new entry, I won't suggest a new entry in this stock.
Okay, that answers a lot of questions. We've got Aru. Aru, I believe that your question on Yes Bank was answered at the top of the show. Let's take Ujjwal Kumar. HDFC Life is done?
Yes, done.
HDFC Life is also done. Let's try and get Mayank Saraf's question answered. He's got a question on Amrutanjan. Do you have coverage on the stock, Sandeep? Amrutanjan, he's talking about a recent uptick in the stock, and he's trying to understand why and whether or not it makes sense to make a fresh entry into the stock. Up today, in fact, a sudden spike, up about 5.5%, 6%.
What a great question. In fact, it's like, sometimes you are writing an exam and you get a common questions where, you are well prepared, and somehow for Amrutanjan, I'm extremely well prepared. Reason being, I have, if you can remember, I have been talking about this particular FMCG stock on your media also, and to our we have recommended this to our clients also as a festive pick. I think it was Diwali. I think it was being recently, recommended to our clients as a Christmas or a Santa pick, and at the levels of around 290. From there, it has gone up to 330, and the target was only 360. So I feel, this stock will continue to do well. It's an extremely old company and a strong pedigree, and somehow, the company has been, coming up with their innovative pain management solutions also, and getting into sanitary napkins also. So I think the company will keep on growing, and the way the rural market demand is going to see an uptick, I think this company will continue to do well. So I think one should, if they have bought this at around 270, 290 levels, they can certainly book some profits. Otherwise, they can continue holding the stock, and it's a buy on decline from my side.
Okay, well, that's the view on Amrutanjan, and Sandeep sounding very, very positive on that one. Of course, the stock is also up as much as 6%. But we'll take a query on mail. We have Ranjit, who writes to us on email, and he wants to know if he can buy Dr. Reddy's at current levels with a medium-term view. Now, while everyone has different definitions of medium-term, I'm going to go with something which is within 1 year, and hence I'm going to take a technical view on Dr. Reddy's. Currently trading at 2,658 rupees per share. Ashish, this one is for you. What would you do with Dr. Reddy's? What would your advice to Ranjit be?
Definitely, the stock has started making higher tops and higher bottoms. So yes, the stock is in a positive territory. In the recent past, it is consolidating, but this consolidation is good for the counter. It's a breather, so it will give us a breakout. Definitely, the volumes are showing us that there is a possibility of getting a breakout, and the breakout would happen about 2,700. So yes, overall momentum is bullish. So someone can go ahead and buy this particular counter. The first target, as the question which was asked is on medium term, so within 1 year, definitely the stock price can be around 2,900, 2,920 within next 1 year. So definitely a good investment as of now.
Okay, let's take another mail query. In fact, Ullas Agrawal has written us a mail. He's shortlisted cement companies, rather. So he's saying that he's got 6 cement stocks that he wants to know about. These are the main ones: Sandeep, Ultratech, ACC, Ambuja, Shree Cement, JK Cement, and JK Lakshmi Cement. He wants to know which is the best pick out of these, out of this entire list. Would you pick the cement sector first of all?
Very frankly, I'm not very bullish on this particular sector. Reason being, the real estate sector is not doing well. Reason being, the infra push might get slowed down because of the election year also. And secondly, previously they used to have that pricing power, being the supply side, lower than the demand side. But now, since there are lots of greenfield and brownfield expansions also in the sector, so I feel there is a very stiff competition also, and there might be some price war also getting triggered. So I won't see a very great opportunity in the mid-cap cement space at least. But then when it comes to one stock which one can really buy, then it will be Ultratech Cements. And I think the quarterly results are also going to come out today only. So it's a great company. In fact, 100 million plus tons capacity, and then they have a huge economies of scale also, and then a strong pedigree also. So one who can hold it from a 2 to 3 years time frame, they can certainly buy the stock. But for short term, I think one can, avoid the sector and look at some other better companies and better sectors.
Okay, Sandeep, we have one more for you in the realty sector. We have a question from Naresh, who writes to us on WhatsApp. He wants a comparison and perhaps a preference between Oberoi Realty and Phoenix Mills. Where would your preferences lie?
Both of these companies are of different nature somehow. Phoenix Mills is a very strong company in terms of, they have got huge properties, huge rental income also on their balance sheet. And Oberoi Realty is a developer, and in fact, a quality developer in Mumbai. So the common thing between them is that they are more of Bombay based. And then, I feel that both the companies are quality companies. But then those who are holding Oberoi Realty and Phoenix Mills, they can continue holding the stock. But a new company which we have been starting recommending to our clients and viewers and my followers also, that is Prestige Estate. Somehow I like this company also, being a Bangalore based company and has some nationwide presence also in terms of, being some projects in Pune also, Mumbai also, in Rajasthan, in Udaipur also. And they are coming up with some new projects also. And the balance sheet also looks good. Then there was a good PE investment also recently in the company. So I think since it has corrected also from the higher levels, so one can certainly look at Prestige Estates.
Okay, let's take Saftar Junaid's question from YouTube. And if we can pull up Nilkamal and look at the 6-month chart, this is exactly what he's talking about. He's pointing out that the stock has seen significant corrections. In fact, Safdar, you're talking about 1560 to where it is at right now. The stock is corrected from levels of close to 2000 if you look at the 6-month chart. He's looking at it and he's asking whether it makes sense to average at this level. This one's for you, Ashish. On the charts for the next 1 year or so, what are the levels that you're looking at?
See, now the next support which I can see on the chart is at around 1200. It is continuously making low tops and lower bottoms. The shadow indicators that I follow, they are also very negative. So I would not recommend someone to go ahead and buy at the current level. Someone should go and take a review at 1200 marks, because 1200 is the level where it has tested 3 to 4 times in the year 2016-17. So this would be a very strong support for this particular counter. So there someone should take a decision, not right now.
Okay, Ashish, coming on Axis Bank as well, we have a question here, and this is of course with respect to, well, there's no term mentioned, but Anand Kumar wants to know if it can be bought into or perhaps sold into. What is your technical view here?
See, the chart is very lucrative. Axis Bank, it is trying to give us a breakout of multiple tops. Now, in the recent past, it has given us a top of around 660 to 600 and around 80 level. So if 680 is crossed, then the stock will enter into a blue sky territory where there is no resistance. So yes, someone should wait and buy only above 680 level. If the 680 level is taken off, then the target would be around 790 within next 1.5 months. So it is an opportunity to get a higher return on investment in short term. So I would not recommend to go ahead and buy right now, but I would recommend only to buy above 680.
Okay. All right. A number of our viewers are actually asking about graphite India, and it is a pertinent question at this point because they've invested a lot of them at relatively higher levels. If we can pull up the 3-month chart or the relatively near-term chart, you will see that there's a correction all the way from levels of 1000 or thereabouts to levels of 630. I believe, Sandeep, that there is a fundamental explanation to why this correction has taken place, and if at all this is likely to sustain, would you recommend getting out at these levels?
No, I won't recommend getting out at these levels. Somehow I feel that, the kind of valuations the company is trading at, extremely cheap. In fact, 4 to 5 P multiple, both graphite and HEG somehow are, trading at around these levels only, and a 13,000 crore market cap, and the kind of growth they have given in last 2 to 3 years is excellent. And in fact, since last 10 to 15 years, if you see, they were extremely, underperforming. But now I feel that these companies will do well in the future also. And at these levels, somehow, I can recommend to average, because somewhere around, 597 is the 52-week low, and it's trading at around 672 levels. So once it comes down, so, one can think of, averaging also. And those who are holding it, they should continue holding it.
Okay, let's pull up Edelweiss. It's actually announced its earnings, and while the top line continues to grow, its bottom line is something which has been of concern right now. And of course, we're going to keep seeing a lot of volatility with respect to earnings, given the fact that this company is also in the non-banking financial space. It's currently at 154. We already know that it has seen considerable correction from the levels it was used to trading at in 2018. In fact, it's come off from levels of well over 300 and now currently at 154. So clearly weakness is apparent here. It's down 46% in the last 12 months. We have a question from Rahul. He says that Edelweiss forms 33% of his portfolio. His average price is 245 and he has averaged several times. His question is, should he continue to average or avoid the stock? And what is the outlook going forward? Sandeep, this is a very specific question, and if you can actually help him out. First of all, what is your view on Edelweiss? Secondly, given the fact that his average is at 245, about a third of his portfolio is only Edelweiss, would you advise him to go ahead and buy at these levels, or would you ask him to hold on?
Very frankly, I would admit that, we have also recommended this stock in the past at around 180 levels also, 220 levels also, and from there it went up to as high as 342 levels. But then, the NBFC space had to see some jitters. In fact, because of that DHFL and India Bulls episode, and there was an ALM problem also in the industry. So all these companies got really affected. And then, this company is a great company in terms of, started as a broking outfit. Now it's an NBFC also. Then it's an ARC also. Recently also, they managed to garner around 9,200 crores. But all these things are, somehow being discounted because the kind of valuations that stock is trading at, I think that's 99 trailing P multiples. So one should not think of averaging at even at these levels. One should wait and watch. And he has been averaging several times. So I would, in fact, advise him clearly that once he is actually trying to average, he should also look at technicals, because lots of times fundamentals are intact, but when it comes to trading and averaging, one has to see the technicals also. And when it was falling like a falling knife only, so one should in fact wait, and he should wait for averaging at these levels. If we can remember, the stock corrected up to 128 levels. So he should be scared, the stock can even get corrected to at these levels also, where it can get a good buying support. So I feel that he shouldn't average at these levels, but he should continue holding the stock. And when it comes to around say 125 30 levels, he can think of averaging at in some staggered manner. But again, looking at the quarterly results, looking at the NBFC space, so it's a very critical thing now for him. And since it is 33% of his portfolio, so I think he need to be cautious.
All right, fair point there. Let's go to Ashish Kelkar on a view on M&M. Ashish, this one is from Kaushal Patil for an intraday view on M&M. And we've got Manigandan on Facebook who's asking for a 6-month view. Obviously, the stock has seen a lot of pressure, as also have all the other automotive stocks. What's the view here?
See, first, intraday, the stock has already been corrected from a level of around 700 rupees to a level of 686. So already around 2.5% points fall is already there. Now from the bottom, it has been recovering. So I am recommending, if you are holding a short position, you need to exit immediately. And if someone wants to enter again into this particular counter on intraday grounds, wait for the price to give a breakout below 687. If the price goes below 687, then the next target would be around 673. So another 2.5% point fall can be expected in either today's trading session or in tomorrow's trading session. So yes, wait for a new entry, but right now if you have gone short, square off, you need to square off the position. Now when it comes to 6 months intraday view or 6-month view, I would not recommend to go ahead and buy, because it is very near to the make or break level. As I have already mentioned, 673 is a make and break level for this counter. So till the time it is above these 673 level, then I am expecting a bounce back from these levels. So short position should not be taken. Long position should be taken only above 732.
Okay, Sandeep, your view on HDFC Standard Life. We have a lot of queries on this one. We've seen that stock come off. How would you approach this now?
These companies, one has to understand that these companies have to be bought from an extremely longer term of view. And since we saw a bad result in the sector yesterday only, so it was, I think, one of the worst sectors which performed yesterday because of the bad results of ICICI Pru. But still, being an HDFC pedigree and being all these stocks have corrected, and looking at the lower penetration in terms of the insurance, and looking at the rural demand which will come up in terms of the government has been very aggressively promoting financial inclusion and aggressively promoting the importance of buying an insurance, and I think term plan will really play a big role. So those who are holding it, they can continue hold it, but those who have to buy afresh, I think one should wait for that.
Okay, fantastic. Now's the time when we slip into the rapid fire segment. Remember, just a call out to both our guests to keep their answers as short as possible. We're trying to fit as many as possible in the span of 2 minutes. Starting with you, Sandeep, we've got a question from Pradeep A. Hopefully you have coverage on Abbott Pharma. Would you recommend a fresh entry?
Oh yes, this stock was again recommended as a New Year from our side. Fantastic company. I think one can continue holding it, and one can buy on declines also, and one can buy also at these levels.
Okay. All right. Okay. Ashish, Z Entertainment. We have Ravi Kiran, who is asking if he should hold or exit the stock. Nothing else mentioned. Currently at 433. What would you do?
Hold with a 6 stop loss of 423. The first target which can be seen on the chart is 445.
Sandeep, Tejas Network, this one from Bhavesh Jain. Would you recommend a fresh entry?
No, I won't recommend a fresh entry.
Okay, Ashish, Darshan wants to know if he can enter into Mindtree, considering the volatility seen in the recent times. Yes or no?
Yes, but with a strict stop loss of around 895 on a closing basis. If the price goes above 928, then the first target would be 960 in the next 2.5 weeks.
Okay, Ranga, aka Voice of the Lamb, wants to know about Yes Bank and IDFC First Bank for the longer term. That's 5 years or so, 5 to 10 years. Sandeep, would you recommend a fresh entry?
One can buy both the stocks from this, point of view. I feel, Yes Bank is also at a very attractive level, corrected a lot, and IDFC First will certainly do well, but then it can be bought on some declines.
Okay, Ashish, another question on Reliance Infra. We have Prajit, who wants to know if it can break above levels of 275, or rather hold about 275, 280.
Yes, one should hold on to the stock with a strict stop loss of around 270, because this is a strong base formation on this particular counter. If we get a bounce back, the target would be at around 300 in the next 2.5 weeks.
All right, unfortunately, that's all the time that we have on this particular episode. Let's thank both our guests. Thank you so much, Ashish and Sandeep, for helping all our viewers with their questions today. Like I said, that's all we have on this particular edition. But
remember that we're just a tweet, a post, or a call away, so keep your queries coming in. We promise to address all of them through our shows. And for all the previous episodes, visit our YouTube channel or website, bloombergqueen.com. Stay tuned. Up next is Power Lunch.